All right, guys. I'd like to personally thank each and every one of you that keep showing up regardless of the late in our different various times. And yes, yet here you are. And appreciate each and every one of you guys. So we'll call it a day with today's class and breaking these down before we call it a day. And I think Mr. Allen asked a question on our previous class. When I was trying to read it, I think that's when our class ended. I appreciate if you send us back that question and we answer it, of course. So all of these things, you don't need all of these things to align before you have a good setup. We just need two of these things. But I had to list all of these things for us to be able to understand what trading actually looks like, what breaking down trading to the detail level actually looks like. But when you do that, it actually helps you to be able to understand the market, what the market is doing, why is the market behaving in such a way that it's behaving, what is prompting or what is pushing this market to behave in a certain way, right? Now, when we come in a bit under the bigger picture, we'll have the macro market analysis, which has to do with inflation and deflation of a country-specific currency. Most of the times, most of the time, the economy has different factors that can actually cause its monetary aspect to inflate or deflate. Now, with the coming of power of President Donald Trump, we've been seeing a potential decline in the dollar. Why? Because there's a statement that I always say, before anything needs to get good, it needs to first of all get bad. So he's probably trying to adapt and rearrange the system, the messed up system, and the Biden government, the Biden administration that was there before, and it's obviously affecting the dollar because it is an administration and in affecting the dollar in a deflationary way. Now we have interest rate, which is a high and the low and a high unemployment rate. Now, a typical example of this interest rate was the effect of 9/11 in the United States. The effect of 9/11 and the effect of 9/11, and we had also in 2008 we had the meltdown of the mortgage and the the mortgage and the real estate market that everyone thought real estate is rock solid. Real estate was never going to fail, but real estate failed in 2008 thanks to Mike Burnbury, that actually turned to realize and understand that these mortgage-backed securities that was supposedly supposed to be AAA rating were actually full of shit, and no one was actually verifying people that were submitting for mortgages, for loan, to trying to buy some certain houses. There was no income verification. There was no employment. Like all of these things actually happened. That was what happened. That was what gave the financial crisis in 2008 that actually affected the United States economy that collapsed in 2008. Thanks to Mike Burry that actually saw these, and he was able to do an analysis and create what they call the collateralized. He created the CDO. What are CDOs? Collateralized debt obligation. And then under CDOs were created the synthetic CDOs, right? Now, these CDOs were actually people that were betting against the housing market, that the housing market was going to collapse. Now, when he brought this to JP Morgan, Chase, and Bank of America, they thought it was a ridiculous idea until the housing market started to collapse. And I'm not making this up. You can check it on YouTube. You can check it everywhere. The housing market bubble or the housing bubble in the United States and every single thing. When they started realizing that these loans that were supposedly to be triple rating and double B, they started failing because people were unable to pay their rent. Some people were filling their loans and their mortgages with their dog's name, with their pet's name, and there was no income verification. They had no agent that were going in place, and they were filled with this bad loan that actually made the financial sector of the housing market, which is one of the most primary sector in the United States that yield more revenue, crash. And as a result of that, what happened? We had a lot of unemployment. a very high rate of unemployment. Everyone, a lot of people were left on the street. They never had anywhere to go. People make money out of it, like Mike Burry and every single thing. I think Mike Burry reached out to the FBI and wrote even to the government if they want to know how we knew the housing market was going to collapse. But nobody actually accepted this interview and every single thing. That was, he traded those information. He didn't do inside of trading, but he used that information and went to JP Morgan Chase, and he went to Bank of America, and he created those synthetic CDO, which he used. And when he was creating this synthetic CDO, he emphasized, he was like, he wants to make sure that he will be paid should in case the bank suffer solvency. And then they mocked at him at the time, but they never knew what he knew behind scene. And a lot of people were questioning, what does Mike Burry, an individual that trades the financial market in his single bedroom apartment, knows more than a doctor or you know, is someone that has a degree in financial market that works at JP Morgan Chase, right? And that alone actually, and that's the way Wall Street like it. Wall Street like it when you believe in people that work in Wall Street, but most of the time they don't tell you Wall Street fails most of the time, more than even you and I. But they always like it that way. So nobody believed what Mike Burry was explaining about it. And then until the housing market started to collapse and insurance market, insurance that was supposed to be the one to insure this market were actually failing as well, because the insurance company were being paid fat fees to rate loans that were supposedly to be AAA rating that they themselves, they know those loans are full of dark shit. Now they take those loans and the insurance knows those loans are full of dark shit, yet now they pay those insurance to rate those loans as AAA rating, knowing fully well that they don't attain that level of AAA rating, and they put it in the system and they sell those loans to individuals that were ready to buy those bonds. It's way deeper than that. I don't want to go into it. You can do your research. That alone, that housing bubble that crashed in 2008, if I'm not mistaken, caused a lot of, I'm open to be corrected about the date. I might have forgotten about the date a little bit, but I think it was in 2008 or something like that, because after that was the arrest of Barack Obama. I know was the murder of Osama bin Laden. Yes. So that alone created a lot of unemployment, and that affected the US dollar, that the US dollar crashed drastically. Now, those are the kind of economic factors that can cause unemployment, which would also affect the interest rate of that company, of that country, and pushing it downward and devaluing the monetary aspect of the specific currency, right? Now we have the intermarket analysis. The CRB has to do with commodities, the dollar index. Of course, we use the dollar index to anticipate where we think the market has to go, or we compare the dollar index with currencies that are inversely correlated. I didn't talk about this, the correlated analysis. I talk about inversely correlated. You can use dollar index like, for instance, USD/JPY is inversely correlated with AUD/USD. Which means most of the times when USD/JPY is buying, AUD/USD instead is doing the reverse. But when they start doing the same movement, which means if AUD/USD and USD/JPY starts buying, know that it's institutionally sponsored and something is about to unfold. Now, it's up to you to shift yourself for a moment and wait to see what the market needs to do, or what the market is trying to make you understand, for you to be able to anticipate the next move. But rare are those cases when they will be buying simultaneously. Most of the time, they'll be inversely correlated, right? Now you can use, but when you can use at that state, you can use USD/JPY as a dollar index and AUD/USD as a pair. But if you're not trading those two pairs, you can use the dollar index to compare. You can use the dollar index to compare AUD/USD, to compare Euro/USD, to compare Japanese CAD/USD, and all of this pair that are combined with that are joined with the dollar But USD/JPY will be doing the same as DXY, as the dollar index, because the first 3 digit is USD. So all the first trading pairs that start with USD, if the dollar index is bearish, there's a huge possibility that it will be bearish soon. All right. Now we'll move to the seasonal analysis. The seasonal analysis will have the bullish tendencies and the bearish tendencies. You guys already know what the bullish and the bearish trend is, right? We'll skip that and we'll go to the intermediate perspective. Now, before we go there, let me look at the question that we have here. Please, how can we trade the news to align ourselves with either bullish or bearish? That is a very good question, but I wouldn't really advise any one of you guys to be trading or build or cultivate the habit of trading news, because of the fact that news is very volatile and it can give you a lot of money in less than no time. Because news, on the contrary, right? When you guys see my trade, it's not like I trade news, because even today's trade, I sent it before the release of news. But my trade form and what news does on my trade, or the way that I'm trying to indoctrinate you guys to trade, is to let news help push the market towards your directional bias, not that you are trading news 15 minutes to 5 minutes before the news release. Because in that way, you could be in the market, but the market volatility and the market spikes and the wicks could kick you out of the market way quicker even though you are in the right directional bias, it can still take you out before it goes towards your direction. You can still actually trade news. It's risky. I'm not saying it's impossible. It's possible. Now it depends on you. If it's your way of trading, if you're flexible with it, you're comfortable with it, it's your call. It's not my call. My fiduciary responsibility is just to give my own advice. If it works for you, great. If it doesn't work for you, I understand. And also, what are the various major news effects either per example? Now let's go to my Forex Factory. Let's explain. When you use my Forex Factory, right? My Forex Factory gives you data of the upcoming week for news. Let's say today is the 14th, right? If we go on more, we have news from the 15th to Friday, right? From the 15th to the 21st, right? Now on Monday, we see there's no high impact news. When you look, any red folder is where there has a high impact news, right? This goes to Mr. Len. Any red folder is where we have a high impact news. Now on Monday, since we're trading more USD pairs, USD JPY, on Monday we'll have JPY news, but it's not a red folder, which means it might not affect the market as much as this red folder could affect, more than this red folder could affect AUD pairs. Now this will have a yellowish, we'll have a yellow folder here. In here, it doesn't affect the JBPY news. We're not trading JBP bear, so it's out of our league. JPY here as well. 5 a.m. It's not a red folder. So, and coming New York market opening, Bank of Canada is on holiday. USD, Bank of the United States is on holiday. So there's literally no high impact news on Monday. So you can either see the market creeping up or creeping below or consolidating on Monday when you see a day like this, right? On Tuesday, it starts at 4 a.m. It's not even at 12 a.m. We have a high impact news of FOMC member Water speaks. It's orange. It's not yellow, but it's orange. Sometimes orange folders also affect currency, but mostly red folders don't. Red folder does affect the currencies a lot. 4:30 a.m. we'll have AUD news, which means any AUD pair, AUD USD, AUD JPY, AUD CAD, any pair that's correlated with AUD will be affected because of this red folder. And we have 3 red folder on a row at 4:30, which means this is the high impact news. The volatility on this day will be enormous at this time. So this is my time, actually. This is Cameroon, this is West African time. If you're in the United States, it will show you the time. Forex Factory will show you the time that you will have this news at your time zone, so that you'll be able to monitor the market within this time and see how the market plays out. Now at 5:30 a.m. GMT, we'll have also another orange folder, which will affect the market. Now at 8 a.m. we'll have GBP news, claimant count change, right? That would affect the market as well. We have 3 folders that would affect the market. 8:45, there's Euro news, but it's a yellow folder. It wouldn't affect anything. 10:30 a.m., another red folder. 11, an orange folder would affect Euro USD. Now look at coming New York market opening, USD CAD, boom, steps in, red folder. That's how you know the economic news that will affect the market and the time. But most of the times, you will see your setup form before New York market opening. Your setup will mostly form before New York market opening. So you're not obliged to wait 15, 30 minutes before entering a trade. No. Sometimes, right, if you're trading off of the higher time frame, expecting higher time frame confirmation, focus on the 4-hour, because on the 4-hour, you can have a nice confirmation for the end of the day where the market will be able to move next from the end of the day. That's where I got this USD GPY sell. On the 4-hour here, let's go on the 4-hour time frame here. Look very keenly. This 4-hour was where we had this bearish order block. This next 4-hour candlestick, what happened? The market bought into this bearish order block. That's why I sent this sell, and our stop loss was at this previous 4-hour high, which is 153.00. Now you see that I didn't wait for news before I was able to send the signal, but then I had this, we had our trade before signal, which means the market bought into this 4-hour bearish order block. Since we have our overall directional bias at hand, what did we do? We capitalized out of this. We sold this market instead when retail traders were buying this, thinking that the market has reached what? A discount, right? Now look at, we used the 4-hour time frame to confirm our sell entry here, because the market was already selling, so we use this. And notwithstanding the fact that Fridays are also market trap days. So yeah, that is pretty much it. I got a little bit distracted. So also, who can reverse major news? As example, which news will affect AUD? I hope this question answers Mr. Allen's questions, because on these, on Forex Factory, you have the different news that affect different pairs at different time of the day. So hopefully that alone answers all of the questions that you asked, because I think it targeted it all. Yeah. Oh, let's go back on our weekly time frame on the explanation that we were having. Great. Out. Now, I was talking about the seasonal analysis. The seasonal analysis, we had bullish and bearish trend. We already know what a bullish and a bearish trend is all about. D'ailleurs, francophone, c'est là qui a carrément changé mon truc en français, genre. Sans demander mon autorisation, il a carrément mis ça en français. OK. Il n'y a pas de problème, il n'y a pas de souci, frère. Understood. Thank you so much. Anytime, my brother. Okay. Back on English. Yeah, sorry about that. Now we'll go to the intermediate perspective. On the intermediate perspective, we try to look at the bullish hedging by smart money, the bearish hedging by smart money, what is being institutionally sponsored, either bullish or bearish movement. Now, this is what I was explaining here on the 4-hour time frame about how this was institutionally sponsored to the bearish side. That's what bullish hedging looks like. Bearish hedging looks like. I explained that. I hope that our video got recorded, because if not, I would cry my lungs out for that video, because that was a huge, deep insight video that could help a lot. That was what I was explaining here about this last bearish candlestick before this bullish movement. That was what was institutionally sponsoring this bearish movement. That's bearish bearish hedging. That's another form of bearish hedging. You know, this last bearish candle before this bullish movement, and we had the institution sold aggressively to the downside. Now, what did the market needed to do is come and mitigate those buy orders that were here by the institution so that they will offload their buy position and add more sell orders to be able to push this market downward. That is what is explaining what we had here. Excuse me. What we have here under the, you go to the monthly, it's a lot, way more jargons. Okay, that's what it was explaining here about bearish hedging. Now, the reverse of that applies itself for bullish hedging that we were explaining here on the 4-hour time frame and on the daily time frame as well. Extreme level historical. You look at every level, they always have a history that you can learn from. Always look at the past data. Historical level is looking at the past data. If you're bearish, what were the market doing when it was bullish? Did it create a fair value gap? Did it create an imbalance that the bearish market needs to fill? All these things, you need to check it out real quick, right? I even jumped and I went to code instead of me going to top-down analysis. So we'll go now to top-down analysis. We'll have the monthly, weekly, daily. That's what I do with you guys every single day. I don't need to go through that. Market sentiment, extremely market bullish sentiment, extremely market bearish sentiment. You get emotional sometimes when the market is either buying or selling. You can control your market in a bullish market. Don't always go against the trend. Don't always go against the trend. Have you ever heard the statement, the trend is your friend? The trend is your friend in certain cases, but on certain cases, you trade against the trend because the last trend is when you get the institutionally sponsored candlestick that is either bullish or bearish. Take, for instance, right? For instance, like take this. You're on a downtrend, the market is creating higher high, lower low, higher low, lower low, high, lower high, lower low, lower high, lower low, right? Now, this last lower low, most of the times you will see something the market will do like this, boom, you just buy aggressively. Why is the market doing this? Those who are trading trend, they think that, I think I've explained this on my last video, they will they will extend a diagonal line thinking that what is happening will keep happening forever. Now, at the last point, the market will reach out to this buy-side liquidity because the people that have been selling this market has their stop loss above these lower highs that has been creating when the market was selling. That is when you want to be trading like an institution. You want to be looking at the trend like an institution. But most of the times, before the market wants to do this, the market must have created one, first trend, 2, 3, and the 4th trend is where we always have the reversal or the third trend. Either way, that's where you want to be looking for your buy order on the downtrend market. And when you buy there, when the market starts buying, it doesn't even give time for retail traders to be able to enter a buy position. They buy real fast, like real fast. So that is what we are talking about. Market sentiment, bullish in every single thing. You can actually capitalize out of that. But you can be able to position yourself in one way or the other and help yourself with that. Now, the short-term perspective, we have the correlated analysis, which means any pair that do the same like the other pair. What pair can I take? For instance, USD JPY and dollar index that do the same thing. If USD is selling, dollar index will be selling. USD JPY is selling, dollar index will be selling. And maybe gold will be buying. They are correlated. Those are pairs that are correlated. Pairs that do the same thing when someone is buying, the other ones are still buying. They are correlated pair. You can actually do that. Use the dollar index money technique and correlated pair smart money technique as well. I just explained that. Time and price. Time and price will have the quarterly effect that we just talked about. Interprice delivery algorithm. We'll have the monthly effect. The monthly shift, we'll have the weekly shift, we'll have the daily range, and we'll have the time of the day. Now, I personally, I don't focus on the daily range and the time of, excuse me, yes, I focus on the daily and the time of the day because I'm an overall trader, but scalper, I mostly focus on time of the day because it's scalp. But I'm focused on the daily range and time of the day because I could hold my trade for weeks and months, and sometimes for a quarter, but I've not yet reached that level of confidence. It's growing, but I'll get there. So you can use this information to your advantage and understand. Now we have enterprise delivery algorithm, institutional order flow, liquidity. Like I always say, the market is controlled by liquidity, market efficiency paradigm. So all of these, you see that all of these things connect to the market in one way or the other. Now, in the bigger picture, you can just need one stuff here to align itself with the intermediate perspective and the short-term perspective. You can take one for them to align themselves. For instance, you can take the seasonal analysis for it to align itself with the correlated analysis at the time of the day or IBDA, and it aligns itself with the monthly and the weekly overall directional bias. That's it. You already have your setup for the day or beyond for the week or for the month. You see that you've taken one each. You don't need all of this to align itself with all of this to align itself with all of this before you have that one setup. No, take one information from the bigger picture to the intermediate perspective to the short-term perspective. And then you got it. Now, this is the time for questions and answers, so that we take the rest of this time to answer whatever question that anyone else has before it ends. We've been on call for 3 hours. So I'm taking in questions now. If anybody has questions, please, this is the time for you to ask it before we end today's incredible but yet fascinating class. I think I learned a lot today. And I'm learning a lot every day, so hopefully we'll learn together. And I'm always open to be corrected. Sometimes I'm not perfect. So, questions, no questions, questions, no questions. No one has any questions, question by question, no one has any questions. No question, no questions, okay.
Yes, sir. No questions.
Okay, no questions. Well, I hope you guys enjoy.
Question.
Okay, Vado, go ahead, Mr. Vado.
Okay, so I noticed this trading week, that US dollar index was going bearish the whole week, and then USD JPY was going like bullish for like, I think, 2 days. Is the US dollar index correlated with USD JPY? Like if if the US dollar index is going bearish, is the USD JPY like normally supposed to be going bearish, or do they work the opposite way?
Now, let me take you like, I don't even like to compare the dollar index with USD JPY because sometimes it gets really confusing. But I like to compare. That's why even the inner circle trader Michael Hudson, when he's talking about dollar index, he's more focusing on Euro USD, right? Most of the times, Euro USD will do the reverse of what the dollar index is doing. If the dollar index is buying, Euro USD will be selling. Now, if the Euro USD is selling, dollar index will be buying. Now, if these two, which means dollar index and USD and Euro USD are invertedly correlated. Now, if these two become correlated at a certain point of time, you should understand that it's the bank that are trading and they are trying to build institutional order for a long period of time. Now, within that period, you can either wait to see what Euro USD is trying to show you, either for you to be able to position yourself like the institutional trader and buy with them or sell with them with the order that is about to align, and use the dollar index as a confirmation, because they will be correlated at a certain point of time. Sometimes they'll be buying at the same time. Meanwhile, they are supposed to be invertedly correlated, but they start buying. You see,
Oh.
dollar index start buying euro USD, and that was what was happening this week. I think I explained that. That was one of the reasons why I couldn't at the beginning of the week. I was like, I don't understand what is happening with USD JPY. It just started buying. And
yes, USD JPY bought up to, if you look at the last swing, the last sell, or the last sell that the banks did,
yeah,
and if you take your Fibonacci and you put it from the swing to the downside, and you see it's exactly at the premium level, I
yeah,
think. Yeah. So I think this buy was just to like make people think the market was about to buy,
exactly. All
and
this
then
buy, also. I observed this buy as a rapid market correction, because when the market opened this week, this was when Friday. This was okay. Friday. No, Tuesday. This Tuesday. Okay, this was Monday. When the market opened Monday, the market just started what? Buying.
buying. Yeah.
Buying. Wednesday, the market bought. So it's like the market was really trying to correct itself before the sell. And we
Before
had
this.
buying from Monday, Tuesdays, and Wednesdays. I think the
Yeah.
sell pressure started yesterday, Thursday, and in today market. So it's like the market was just literally trying to correct itself rapidly. And that's when I really got confused, because I was like, what the heck is going on with AUD, USD JPY? Now, when the market reached this area, that was when I sent a sell signal, right? I sent a sell signal that we took a loss here, and the market instead bought the both. That's when I was observing this 4-hour high here, and the institutional order mitigation bearish order block that was sitting itself here on the 4-hour time frame. So that's why at the beginning I was like, I think I wrote that I was like, I don't understand what these pairs are doing, but what I will do, I think what is advisable for me to do right now is to stay off the market for a while.
Yeah, the market was crazy. Like when I checked the US dollar index, it
Yeah.
was like, if you open the US dollar index right now, you check on the 4-hour time frame, it was like, if you were a retail trader, you might think the US dollar.
Look at what happened. This is it.
Yeah.
So look at this, our line that we had here, right? I think we were all actually expecting this as well, because it bought, and okay, this was the gap that literally wiped my small account that I was building. This gap that happened on dollar index, it happened on AUD, and I had a position in AUD that literally wiped me the heck out.
Damn. Yes.
I mean, I was so pissed off. And when we go on the 4-hour time frame, you look at this. As he came back, look at this. Those who trade market structure, left shoulder, head, right shoulder, as he body to here, it collapsed. Came back, retested this high. Retested, let's not even say retested here. You retested, look at something. Market opening of the previous week, it reached back towards that area to the tip. On some brokers, it will fill it directly. And what did it do? It sold. Now, the most interesting part of it all, once it was selling, what was AUD USD doing? AUD USD was buying. What was Euro USD doing? Euro USD was buying. Do you want us to check Euro USD? Let's check it out. Euro USD was buying. That's it. That's when the buying started here in Euro USD. And Euro USD is going to keep buying for a very, very long time, because I think Euro USD will be buying for the rest of this first quarter and the second quarter as well. Euro USD has a long way to go. Please, it has a long way to go up to this area. But then it wouldn't just boom buy into that. So you might have some consolidation along the way, some market manipulation, seeking the sell side liquidity for you to be able to see some white off or run in liquidity. One of those things that we explained on our previous chart, you can use that to be able to benefit from this bullish run on Euro USD, because you could see Euro USD run like real high, and look for more buy opportunity on Euro USD as of the rest of the month until next month. And if we see how this month closes on Euro USD, it will give you maybe a confirmation for next month. You see, for next month, if this swing become a bullish swing on Euro USD, you should understand that The next point
Yeah.
of interest is this breaker here. And if you go on a 4 hour, you see where the breaker align itself. Zoom in. See what this breaker align itself, right? After taking out all the liquidity above this area, it comes out on this area, take out this high end. It align itself with this nice bearish order block, bearish breaker block here too. So you already have a long buy to go, which means the dollar index has a long way to collapse as well. Thanks to whom? Thanks to President Donald Trump that is trying to correct the system that is actually affecting the dollar. Now look at something real close here. We have a gap here on the dollar, which means this sell on the dollar also will help correct this gap and fill this gap that he has left for a very long period of time. We could see a potential aggressive collapse to the downside and fill this, which will do what? Give an aggressive buy on Euro USD, give an aggressive buy on AUD USD, and so on and so forth. And we could see a sell as well on USD JPY, because look at what happened. DXY was selling, USD JPY was selling. So
yeah, that's what got me confused, because US dollar index was selling, and then at the beginning of the week, and then
exactly. Now this is what I was explaining the theory of. At a certain point, you see they will become correlated, but it's not. It means the institution is actually doing something, because at the beginning of the week, USD JPY was buying, and it was buying crazy. But look at what happened at the end of the week of that dollar index. It dropped, and USD JPY started dropping as well.
Yes.
So that is a typical example of institutional manipulation and institutional order flow. That is just it. I hope I was able to answer your question.
Yes, sir. Thank you, man.
Anytime, my brother. Anytime. Anyone else have any question? What I was about to say is I hope you guys enjoyed the Super Bowl, man. Like Kendrick Lamar nailed that shit, bro. I don't know how any one of you guys feel about it, bro. I love Kendrick Lamar. Kendrick Lamar, not like us, was the first dance song to be sung on the Super Bowl, or to be allowed to sing on the Super Bowl, which won 5 Grammy Awards, bro. I don't know. Like, let's give.
I don't know what the negotiation was, but I didn't appreciate the fact that they censored the most important part. You saw it when he made it right. That's why it was supposed to say 35. 35
The censored the most important part. The censored it.
I was like, why? Yeah, man.
I think because they had kids there, and they had people that they needed to censor some kind of words. So
definitely, yeah, I get it. I was just like, really,
bro. Like, oh, come on, man. That's always. I don't know. We're not gonna hear Drake for a very long period of time, and I think.
Bro, it's declining already. Yeah, man. Anyway, Drake has made a move. He's a legend on his own. So whatever things happen, he's still good.
No. Drake is big, man. Like, no. See,
yeah,
the thing is, I'm not like against Drake or something, but I just like the way Kendrick Lamar brought back the value of dice in the rap game. I don't know if you understand.
I agree with you on that one.
Yeah, the value of, in the rap game, we didn't see, after Tupac and Biggie, there was no more dicey, versus rappers and everything. Kendrick Lamar brought back that energy. It's not about even winning in every single thing. It's just about that rap game energy that he brought back, and he gave value to Compton. So, I mean, it's just crazy.
The only person that was even left standing out, people even scared of it, was Eminem. I still Eminem, but Kendrick Lamar. Yeah, Eminem is there, but Kendrick Lamar.
Yeah. Come on, guys. I mean, I love today's session. We just have less than a minute, and we're about to close soon. And someone just asked a question like, bro, do you keep doing Zoom call like every Friday? Yes, we do Zoom calls Monday, Wednesdays, and Fridays.